Hi, welcome to the Market Alert for Tuesday, the 18th of April 2023. So shorts were steamrolled as late day squeeze sent stocks to session high and the VIX plummeted. Yeah, it's one hell of a squeeze yesterday. I don't know whether it was the plunge protection team or whatever was behind it or whoever was behind it. Dollar bid and vol smashed on strong data and reduced banking fears. So whether that was the rumour that was thrown into the market, I don't know. But US stocks paid losses. Spot VIX fell to 52-week low. The implied volatility didn't. This actually moved up slightly from the 1246 to the 1335, which you can see there. But the VIX, again, which is another one that people actually monitor, is at a 52-week low. But then so is the implied as of yesterday. So let's move on, have a look at the economic news just before we get into the markets, just in case there's something major today. I very much doubt. We've got claimant change for the UK at 7 a.m. and average earnings, and then just the ZEW economic sentiment out at 10 a.m. So no news to talk about of today. So again, the market will make its own mind up, and no doubt we'll move back to the upside. Speaking of which, let's have a look at this short squeeze from yesterday. We'll kick off with the Dow. And in the Dow, it's not a big day by any means, but you can see there that the market came off the 5-bar moving average, managed to close back above it, and then sideways to higher on the overnight at the moment. But a 30-minute chart tells the story. You see prices came down. They came back 89%. They went down to the 200 MA and the BRN here. You see the demand coming in. It was oversold. We also had divergence and the stochastics crossed, and the market was sent back to the upside, taking out the resistance that we'd had earlier in this market. Overnight prices are attempting to get back above the close of yesterday. They just need to take out the high, which they've already come and had a look at and tested. So take this out, and then they can continue to move up in the daily chart towards the 89% retracement area there. In the German DAX, also still long in the daily chart above the 5-bar moving average. We are overbought, that's for sure, but the market can remain strong and overbought. We've got some reasonable volume, I suppose. We are showing divergence, though, which means that the momentum is dropping off slightly, but we're still above that 5-bar moving average, and that's the first clue of any sign of potential weakness coming into the market. 30-minute chart, we shot up in the morning and then we reversed in the second 30 minutes. So the first hour we were up and we were down, and that was the pattern for the remainder of the day. We saw the market trade down to the low. Guess what? They bought back in here, and then they found resistance at the DP, the 50 EMA and the BRN before moving lower. So we ended up with a 62% retracement there, before the market then followed the Dow back to the upside, but nowhere near as strong as the move in the Dow. We've got a problem here at the moment. We need to get through the close, the DP, and also the BRN to get anywhere near yesterday's high for the German DAX. In the 5-minute chart overnight, not a lot happening. You can see that we're sideways there. We've got a bit of a gap down there, and then the market's making its way back up above the close and the DP, and there's the move with the Dow last night. You can see it just straight up, just a couple of red bars. That's how sharp the move was. The markets were doing nothing until that point. They just drifted lower from the morning, as you can see there. In the US, S&P 500 also closing back above the 5-day bar moving average, again indicating that the market is long in the short term. In the 30-minute, we drifted down, traded down to the 200 MA, and then we just came out of nowhere. Like I say, I don't know whether it's the plunge protection team or whether it's genuine buying. I suspect more the former than the latter. The market's struggling with the close at the moment and the BRN. Obviously, no news today, so that makes it easy for the market to continue and take out the previous day's high. In the FTSE 100, same thing. Market still long, still above the 5-bar moving average. The parabolic remains green all the way through. We are at the 89 though. We have got those lows in the implied volatility, and when everybody starts talking about that, then treat it as a warning sign. And in the 30-minute chart, yesterday the market moving higher, then coming all the way down to the previous day's close, and also the DP where the market finds support, and then again on the electronic session goes back up to the high following the Dow. And unlike the other markets we've seen this morning, the market needs to get through the DP and the close in order to move higher. Over to the currencies, GBPJPY still stuck in that sideways range at the 89% retracement, still managing to close above the 5-bar moving average. Bit of weakness there with the parabolic turning red, and we are overbought, and it looks like we have got the crossover there. See, we've got a bit of a crossover as well, so a bit of weakness around there in the GBPJPY. Yesterday morning we moved lower, found support at the high, it came back 89%, then dropped down to the BRN, taking out the 3 averages there, then taking out the BRN, and then all of a sudden we reverse and we came back above the DP. Like to keep the market above the DP if nothing else, then sideways, and then just making its way back up to yesterday's high. In the pound, this was down yesterday on the strong dollar, and also there you can see below the 5-bar moving average, so a bit of weakness around there at the moment for the pound. Needs to get back above the 5-bar moving average, which is the pink line. The 20-bar moving average is the green line there. Need to get back above these in order to move back to the upside. In the 30-minute pound, we moved up, we then sold off, we then moved back up again, but then that 50-bar moving average there creating a resistance, and the close, market closing back below the 20-bar, the low as well, coming straight through the low there. It supported it for a moment or two, then straight through to the S1, and then we've seen the market trade sideways there up to the DP level. In the US dollar, up yesterday, bit of a bounce there. Overnight market showing a bit of weakness and moving to the downside there. So yeah, I mean, it's that 101 level, isn't it, that we've spoken about for the last 3 mornings. That's the important thing the market needs to hold at this particular level. In the metals, silver monkey hammered down yesterday. That's 2 days on the trot now that silver's been moved lower. However, it's finding a bit of support overnight at the moment. As you can see there, we're just starting to make our way back from the close. It's become a bit of a support as the 20-bar moving average. But yesterday we started off reasonably well with the market moving up, the DP there, and then prices moving down, and then the resistance there with the averages, and then being slammed to the downside, which you can see there before the buying came in. Big bar there of buying, oversold, and then we had the crossover, and then we switched back to green there. So a bit of a bounce towards the end of the session, and overnight moving up slightly there. In the gold market, similar picture, but not as big or aggressive move to the downside, holding at the 20-bar moving average. And there you can see again straight up. Then we made our way down to the S1, and then we got back above Friday's low in the gold market, and have moved up, and we're above the DP, unlike silver at the moment. So what effect has this had on the gold-silver ratio? Well, let's have a quick look. As to be expected, the move in silver was far more dramatic than in the gold market, so this means that we've seen the gold-silver ratio moving back towards the upside there, up to 79 for the last couple of days. No surprise there. Silver is far more volatile in its moves when it comes to intraday activity than the gold market. Okay, that's it for this one. If there is anything else to report, I will let you know, but let's see what happens. I very much doubt there'll be too much volatility, given that we're heading into May, and also the lack of economic news today. 3rd of May is the next FOMC meeting minutes with regards to interest rates as well, so don't expect a lot going forward. We've got CPI from the UK tomorrow, so that should be interesting for 10 minutes. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.